Hi everyone, this is my first video here trying to get into the habit of charting publicly and being accountable for my own trades. My name is Tony and I have been a student of the markets for a long time and wanted to just kind of dive in and explain what I'm seeing. Again, this is not financial advice. I'm a student of the markets. This is just, I've done a lot of studying and learning the different ways different markets work and just learning about technical analysis and whatnot. And this is just my perspective on what's going on. So I've been hearing a lot of people freaking out on the S&P 500, and they're not wrong. But I just wanted to give a little technical analysis, at least from my perspective, to kind of not have everybody super duper freaking out. So let's start off with the high time frame on the monthly here, and let's see. So let's draw a ray. That's going to go from this low, and with a ray, basically a trend line, we're going to try to connect at least 3 points. And if you can see here, we have point A, B. This one broke the trend line, touched the 50. So this red is the 50 EMA. This is the 200 EMA. I try to keep things a little simple. I don't try to, flood the screen with a bunch of stuff. But, this is working for me right now. It's nothing too crazy. So we got one touch, two touch, three touches, almost a fourth touch. So we're still in an uptrend. There's definitely so this right here, this indicator is the RSI on a 14 period. And this is also the stochastic on the 14 period. I've done some custom stuff here so you can see that, the overbought. If you know some technical analysis, that doesn't really mean it's really overbought. It just gives you like a good guide. But we do have divergence here on the monthly, which is very powerful. And it goes, this goes from January 2018. So this is a 2-year, well, not a 2-year divergence, but a year and a half divergence, give or take. But that overall trend is still good there. Now, let's draw another trend line. Let's try to go from this low. Let's see if we got some touches here. Well, it's still too fresh on but either way, even if you go from this wick or this tail to this one here, we're still, price-wise, we're still in an uptrend. Now, this is forming, if we zoom in here, this is going to be interesting because this is it's forming into a doji. This could be an inverse hammer, bearish pin bar. Different people call it different things, but this could end, not so good. So, but overall, we're still in an uptrend. So, on a monthly, we don't freak out. So let's go into the weekly and see what we have there. So actually, let's go back to the monthly and see if since we're in all-time highs, it's kind of hard to draw some support and resistance. But let's, this is actually a pretty decent little support and resistance. So I guess we can just do it here. So we have one there. Kind of play with it a little bit. Let's see here. So I think I'll just stick with that. That seems like a pretty average support and resistance there on a monthly. And let's go to the weekly now. So on the weekly, you can still tell that it's on a pretty darn good uptrend here. So at this point, what we could do is we could draw some Fibonacci and try to see if we have any concerns here. So this is going back all the way to December of 2018. So it's pretty far back on a weekly. It's not too crazy, but if you want to be a little more conservative or aggressive, whatever your thoughts are, you can see that so this is going back on a weekly from this hammer here, September 19th, 2019 to today, basically. And the retracement, this is kind of the question mark. This is where should we freak out? Should we not? This is more of that virus that's going on in China, the coronavirus. It's scary. It's horrible that a lot of people are dying. But technical wise, this is nothing so far. It's nothing to be concerned with. It's pulled back to the 23.6. Nothing too crazy. You usually want to see a test at the 38.2. And then from there, see where we go. Are we gonna? Is it still bullish? Is it gonna just bounce off of here and go straight up, or is it gonna break past this and go down to the 618, the 78.6? That's kind of right now. It looks like that 50 is going to the 61.8, the 50 period EMA. So it wouldn't surprise me if we touch here and we just bounce out of there. Now let me see if I can adjust this particular sucker right here. Well, we can do like a different type of just go there. Seems like a decent one. We can actually draw another trend line going from this bottom here and try to see if we can so actually that one seems like it's respecting it pretty well. Let's get rid of this guy here. It's not really telling us much. So from this hammer wick low to this wick low, you can see it's respecting that that trend line. So we're still, I mean, we just broke, but we haven't confirmed. So that's kind of like what I'm waiting for here on a weekly. Well, and there's still time. I mean, we're only on a Monday. As of this recording, it's 12 o'clock, 12 p.m. So we got to see where we go. This right now is just heavily dependent on the coronavirus. It seems like that's the fundamental driver for this particular pullback. But we got to see. We got to see where we are. So it hasn't even touched the 23.6. Really, what you want to see is at least come back to the 38.2. So this could just keep going forward if we have some good news, and it, bull rallies on, and there's really no need to freak out. If we break 61.8, and really if we break 78.6, which would line up with this long-term trend line, then yes, we should freak out. Maybe not freak out, but there's that would be pretty significant because this trend line hasn't been broken too heavily in several years. So I mean, there's this one scenario here, which is the bear market up to December 2018, but that was quickly resolved on the upside. So we got to see. I don't think that that's too crazy. So now let's dive into the daily. I wanted to keep this kind of short, but let's see how we can do this. So on the daily, we're still basically it's the same picture. We have that pullback that just recently happened. We haven't even closed on the daily, so there's a good chance we'll close here, and then we just gotta see if we respect. So we gotta see if this trend line that broke, is it going to become resistance, or are we going to break through it and then continue support and continue the bear market? So it's hard to say. I mean, right now it's really up in the air. The reality is that any technical analysis is going to get trumped by any fundamental news. So any fundamental driver is going to just basically void technical analysis. But if we're looking at the long-term macro, it's still bullish. It just broke, but we haven't confirmed, and that's huge. We need to confirm. On the daily, we need to confirm. I mean, it's pretty low right now. It looks like it's going to close down here, but we had similar scares before with the Iran war and whatnot. So we gotta see where this week is very critical in my point of view. We got to see where the daily wicks, the daily closes, occur, and more importantly, the weekly. The weekly is going to be a huge one here. I think that's going to be one of the major drivers here. So the next week or two is going to be very important. So let's see how that goes. Again, this is not financial advice. This is just more of me trying to put on paper, quote unquote paper, what I think, what I see, and hold myself accountable to my own trades and my own studies and my own technical savviness when it comes to the markets. So always looking to learn. If there's anything that anybody sees that I can improve on, that I can that if there's something that you want me to go more into, if there's something that you think you can clarify or something that you may have a better view on, share it. Let me know. Looking forward to it. Again, my name is Tony. Thanks so much for tuning in. Subscribe if you can, and like if you can. If you don't, there's that other button too, and hopefully I'll see you later. Thanks. Bye-bye.